First one, from a market perspective and type of clients, they are still very much into wealth creation, so they look for growth. From a value proposition, we have a lot of traders in Asia Pacific, but in reality, 60% of the Credit Suisse client still value advice, so they look for advice. From a change of habit when it comes to consuming financial services, more and more people want to have a digital access to the bank. And the last trend, which is obvious since a couple of years, is the need for diversification. The first one has to deal with what we would describe the regulatory framework. There is a frenzy of regulation which came out of the 2008 crisis. At a point in time, there was a bit of a loss of trust, as well as the need from the regulator to ensure investors' protection and a higher level of standards towards protecting the investors. This has developed into a significant amount of new regulations, which happens in everyday's life. Therefore, the cost of servicing a client has increased by a multiple of 2-3 times just to meet these obligations, like suitability, pre-trade checks, documentation of source of wealth, documentation of an update of all the KYCs around the clients. That's really competitively very, very demanding. The second competition has to do with the landscape. The industry itself is consolidating. And you have seen that Barclays is for sale, but other banks like Societe Generale, American Express, ING, many other banks are kind of exiting the market because of the cost of servicing their clients. So the landscape is consolidating onto the best players. And the third element of competition and pressure has to do with the markets. The markets are more volatile, more complex. The risk is off. And therefore, you need a multi-set of infrastructure and services to meet the demand of the clients. Wealth management will change substantially going forward. We are at the crossroad. If you think about digital as a technology, it has pervaded almost every aspect of life. You don't order a book from the bookstore anymore, just to take a simple example. It will happen in the health industry, and it will happen in the wealth management industry as well. It is taking place. But it will take a certain numbers of years until the behaviors will actually really change the practice of private banking. We at Credit Suisse, we believe technology is here, changing the way we compete. And therefore, we have decided to invest heavily into a technology which is relationship enhancing. It's not about replacing the RM, it's about actually empowering the client to get access to information and advice anywhere, anytime, so that it can take better decisions. But it's also increasing the service and the engagement with the financial institution, with Credit Suisse relationship management. And the combination of this empowerment, leveraging a platform which is on 24/7, this will actually change a lot the way we disseminate information, curate for content, and ultimately interact with clients. The first one is the multi-channel approach. In other words, the clients today want the point of trust with the banker, and the banker stays keys to the relationship, but they also want a multi-channel service where they can do things by themselves on a self-service basis on the go. That multi-channel function needs to be delivered as a promise of a higher level of service. The second thing has to do with the way we disseminate information and advice. With the digital technology, dissemination is instantaneous to the 10,000 clients of Credit Suisse. They all receive the daily report on the market update at the same time. So there is this element of speed in the execution, in the recommendation of the next best advice. And third, there is definitely an advantage with the machine, which is to be very systematic and consistent, tapping into data analytics, portfolio and client analytics, which allows actually to propose content in a way that is very different from having just a relationship manager analyzing the situation one by one. The new world is becoming very much ubiquitous. a bit more automated in recommendation, but a machine will never give you enough context for decision making. It will give you an input, a solicitation, and therefore the dialogue and the engagement now which is taking place between a banker and a client is changing. So the conversation becomes very more targeted and the service becomes much more value add than just, what is my cash balance, what is my execution price, what is my loan to value, because all these information are available on a self-service basis.